Okay, so just quickly here, I'm gonna show you my setup. I'm paying attention to the market now. It's making, like I said in my last video, you never know. You can never predict what's gonna happen. So here's where I took my profit, and this is the low of the day. Typically, I would take my profit somewhere here, but this is the low of the day. I did not wanna play guessing here, so I took my quick profit, and as you can see. Had I not taken my quick profit, look what happened to the market is now turning around. We're hitting the 200-day moving average. My indicators say that it should go lower, but I didn't get a signal yet, and we don't know what's going to happen. Typically, when a stock or futures contract hits the 200 moving average line, we see some pullback. So if you want to, this is a tip for a quick trade over here to make a couple of ticks over here. Once you hit the 200-day moving average, which is at, did we touch it? It's lagging. It's a lagging indicator, meaning that it will compute. I have it computing at the close of bar, so it's still on the last bar. But yeah, we're somewhere here, 825. You'll probably get over here, oh 07. So yeah, you'll probably get a tick or two, maybe 3 ticks out of this. It's just a quick trade for real scalpers. You may not want to do it on the 5-minute candles. I use 5-minute candles because I find them to be more reliable than 1-minute candle when it comes to trends and when it comes to not giving your stops to the market. But I'm just going to show you quickly how I set up my day over here. How I came up with these lines over here. These are Fibonacci lines, and whether you want to believe in Fibonacci or not, it doesn't matter. The market seems to embrace Fibonacci and the Fibonacci method and the Fibonacci lines. So what I did was I drew. I have two sets of lines here. I know it looks confusing. It looks like spaghetti to you, but it's really easy to figure out. So you go to drawing tools, and I drew a Fibonacci retracement. And the way you draw it is you go at the high of the day and at the low of the day. You get 2 points for the retracements. Over here, the green one represents the Andrew's pitchfork. So if we do go lower, as you can see, Andrew's pitchfork does not work all the time. In this case, it would work. It would become active if we go lower on the market and kind of go below yesterday's low. It will become active. But so far, we are working with a fib line, which is right here. And as you can see, price is really responding to the Fibonacci line over here. So it again, you don't have to believe in Fibonacci. You don't have to believe in Fibonacci lines. It doesn't matter what your beliefs are. What matters is that the market believes it, and the market makes decisions based upon it. So therefore, you better be aware of it. Um, and that's it. So we hit the now this right here. It's a good sign for it. We have two things going on here. We have the 100% fib line here, and we have the 200-day moving average. Those are two things, two indicators that we may have some retracement. We can break through this, absolutely. If the market feels like going up today, if there are more buyers and sellers, we're going to break through this like a rocket. But there are a lot of sell orders over here, a lot of sell orders in this area here. So if you want to scalp, this is a good area to do it, because you're gonna make at least you're gonna make about a point over here, and that's it. Quick profits. You have to, you cannot go and bet that we're gonna go down here. We're gonna go to the 50% line, or no. This is quick. This is quick because you're not using any indicators. You're just going based on the fact that more often than not, there are a lot of sale orders over here, especially on the 200-day moving average. But today, it looks like the 100% line is yesterday's high. So that's what it's going to represent. And there are a lot of people with sell orders over here. A lot of buy orders around this area, so we may penetrate over here, but for a quick scalp right here, a sell, and you make, like, if you would have sold before, you would have made, maybe 2 points, but I won't, I won't stick around for 2 points. I'll make my quick point over here. In that case, I'll trade maybe 4 contracts. A contract margin on a contract is $500. So if you're trading, what that means is if you're trading one contract, you have to pay, you have to put down $500 of your money. So in quick profit trades like this here, just one more tip before I close this video. Here, my stop loss would be maybe over here, maybe like 3 ticks. Okay, so 0.8 to 0.75. If it closes above, anywhere above the 200-day moving average line, I'm out. But more often than not, that's what I've seen, and that's what you'll see if you go back on the charts. We should retrace for at least 1 point if you want to make just a quick profit. And in that case, I'll trade more contracts than usual because I'm looking for a quick profit. So if I'm going for 1 point, then 4 contracts is $200, 5 contracts is $250, 10 contracts is $500. But I don't go more than 5 contracts at a time. I would say for quick profits like that, maybe from 2 to 5 contracts, depending on what else is going on in the market at the time, and depending on a lot of other factors. But I don't go over 5 contracts, not at this point yet. So, but here, as you can see, we hit the 200 moving average. We may go down and hit here. It may just consolidate up and down here. Very choppy waters. I don't usually swim in these waters, so it looks like I'm going to be staying away from the market for a while, up until we show some direction. This is Woody's pivots. Now, I don't use this. I don't really use pivot points, Woody's pivots. It's more of an indicator for me. If the fib is not working that day, let's say I draw the Fibonacci lines and we gapped up or gapped down by a lot, and also the Andrew's pitchfork is not working today. Well, and as you can see, I only have the Woody's pivots. I think there are about 6 or 8 pivot points. I don't go by those things. I just use the main pivot here, just as some indication. Let's say we're overextended on the 200-day moving average and the 13 and the 50. It's just something to go by. Don't use it. I never put money on it. It's more for, I wouldn't say entertainment, but more just to see if, just for fun, just to see if people are really paying attention to this thing. I know that a lot of people use it. I know a lot of people swear by it, but I don't use it for money. It's just kind of like to say, like, to myself at the end of the day, there's Woody's pivots again. It it touched the pivot point, but today the pivot point happens to be right there at the fib line. So I wonder if that has the pivot points, Woody's pivots, has anything to do with the Fibonacci calculations here. It was near the fib yesterday too, so I wonder if this has anything to do with it. But I darkened the other pivots over here. I have a black screen, and so my eyes won't hurt at the end of the day. Professional traders usually have earthy colors and black screens, but they typically would have really, really earthy turquoise, but an earthy turquoise choice. I forgot what it was, but it's they dress it up real pretty. I go for simplicity here. I may make these candle colors maybe pink or something, because the color red, it's it's too much red. So, anyways, that's just my attempt at humor there. But here we're going lower, and we may hit the fib line. Who knows what's going to happen? I'm just waiting. I just kind of sit around and wait for signals. Let's look at the volume. Yeah, low volume day, nothing much going on, and we're just retracing back over here, back and forth. Choppy waters, I don't swim in choppy waters. I take easy trades, or trades that I deem to be easy and high probability. And I got a signal here saying that we were going to head to the low side. So I may take this trade over here, 06. I'm going to wait for this thing to retrace a little bit. 08. Yeah, so I'll just make another video based on the trade. And remember to subscribe. Subscribe to the channel. Very important. And like the video.